We'll bear brief. This is our first episode. I'm Joe Cortucci,
I'm Arpit Sharma.
and we are going to at you guys every week, break down what we saw happen in the markets last week, talk about what it means, and then what's going to come ahead. Before we get into our first ever episode, we want to tell you a little bit about who we are. I'll start, Mr. Arpit. I am Joe Cortucci. I am the founder of Transcend, which is an RIA. That's not what this podcast is about. I've been working in the financial services industry for 26 years. I am a CPWA, which stands for Certified Private Wealth Advisor, and also a chartered financial consultant. So I've got quite a bit of background in the financial services industry. I've worked with clients all over the place. Again, the podcast is not about working with more clients. It's really about Arpit and I kind of sharing our thoughts and about what's going on in the markets, maybe some catharsis for us individually when we see things as volatile as they have
Yeah.
been lately. But my background is working with clients in that way. I do also own a tax firm, so I've got some background in that. And there probably going to be some episodes where we'll delve down the tax road, particularly as we get towards the end of the year. We can talk about tax loss harvesting opportunities and things like that. But for the most part, it's just all about another way for us to get more education, more entertainment out there for you. I should say also, this is really important, that the podcast is informational education purposes only. It is not to be construed as advice. We are
Yeah.
registered, licensed professionals, so advisory service will have to be offered through a separate company. This is really just about education and information. So, Arpa, let's talk a little bit about your background. You're a young superstar and CIO of our firm. So go ahead.
Yeah. Like Joe said, I am the CIO or Chief Investment Officer here at Transcend. I've been doing investments for the last 10 so years. Doing it from something as small as my own personal portfolios, now doing it on a more professional stage. As Joe also said, we are professionally licensed, and I also have I'm a CFA as well, Chartered Financial Analyst. And so, looking forward to just providing some my own opinions, my own knowledge, and a chance to kind of extend my confirmation bias out to the world and give, I think a different look from what most others are probably seeing out there in the marketplace, right?
Yeah, man. I think one of the things that frustrates me as an advisor, but also just as an investor, is there's always seems to be a bullish take, and it's easy to say I'm bullish because more times than not, if you're bullish, you're going to be right. But I think it takes a little bit more courage and also a little bit more skill to spot where some of the bearish type scenarios will emerge. And while no one has a crystal ball, and that's why there was that compliance conversation at the beginning, I think it's helpful to kind of point people towards what to look for that could be potentially problematic. Because in general, the United States economy and markets tend to trend upward, even if there is short term volatility. So for me, the show is not just about sharing what we know and share what we think, but it's also kind of just like that back and forth dialogue where we get to kind of hash out in real time the struggle that we're having in our own minds about where we should
Yeah.
deploy our own capital, let alone potentially the capital of our clients. So it's going to be fun. I'm looking forward to it. Getting into that once a week rhythm, I think will be really good for me. And I really enjoy our personal conversations, Arpit. We've had lots of them. So talking about this and then uploading it, hopefully, I'll find some people will find it entertaining as well as educational.
Yeah. And that's all kind of, I hope for, the takeaway here is just education and not to, like we said earlier, not to not actual advice, investment advice over here, but just something that another opinion, right? Or more noise to add to your daily your daily consumption of financial news.
Yeah, yeah, yeah. Well, let's unless there's anything else, why don't we dive in and start talking about last week? So last week
Yeah.
was March 23rd. Obviously, any investor who's listening to this who's got money invested in the market knows last week was kind of a little bit of a what I would call capitulation in the markets. They didn't, especially at the end of the week, we saw some intense volatility on the downside. We officially entered into correction territory in the Dow, if I'm not mistaken. Can you confirm that?
The Nasdaq. So tech has officially entered correction territory. I believe it's down around 16% now on the
Oh
year.
wow, good.
Yeah, and S&P is down 6.6, so pretty staggering numbers.
Yeah, and then what are we looking at in the Dow? Is the Dow also down?
Yeah, Dow is also down. All equity indexes are down. But they're not the only ones, right? They're getting followed by almost everyone else.
Right.
Treasuries are also down.
Mhm.
Uh,
So, like, from the standpoint of investors' ability to hide anywhere, there really hasn't been much or anywhere that they
Yeah.
have been able to. Even gold has gotten its world rocked a little bit over the last month or so.
Yeah.
Uh,
We
oil,
gold and silver.
oil, I mean, oil has gone up about
Mhm.
65%. Is that an area where people have been able to hide, or even the companies who are in oil and gas are also suffering?
Yeah, so the companies in oil and gas have actually done fairly well. However, when markets generally have these massive overreactions, we've seen historically everything kind of just falls no matter what. That probably is a combination of one, either market fundamentals falling, or just two, uh, investors being forced to sell, and so they just kind of sell out of everything, right?
Right.
When investors pull out of that, the Vanguard S&P 500 ETF, a lot of oil companies are in there. They also just get sold off. So,
Yeah.
in major market movements, everything. I mean, there's almost nowhere to go except cash.
Do you have any thoughts on geopolitical? Because this is obviously a lot driven by what's going on in Iran.
Yeah.
Do you have thoughts on how long or how much teeth typical geopolitical disruptions like this will put in terms of downside pressure on the markets? Because I think a lot of people, when the war first broke out, markets were very volatile, but they fought their way back.
Hmm.
I think the assumption was it was going to be relatively short, but that's turned out not to be true. So,
Yeah.
supposing this war has longer terming duration, what examples do we have to look back on, or what do they teach in the CFA school about geopolitical
Well,
effects on markets?
well, one thing they teach is that if there's a war in the Middle East, oil is going to skyrocket in price. There's very little precedent on this one. And a lot of people do point to the '70s, so when we had a little bit of the oil stagflationary crisis over there, that kind of happened. Some similarities, but also a lot of differences here between that and now, obviously. But when we look at this, there's only a few things that we can kind of consider. When the war initially started, a lot of traders, there was a lot of buy the dip sentiment
Right.
occurring. Which kept the markets relatively stable,
Sure.
and this revolved entirely around taco, right? The taco trade that
So
Trump always
Trump always
chicken out.
chickens out. That's the
Yeah,
idea that
Trump always chickens out.
he would back down. Look, we're not doing politics here. We might do politics a little, but the
well,
Trump
that
phrase Trump always chickens out. That's not our phrase.
that wasn't us.
That was the markets that did that.
uh, but that was the assumption, was that Trump would, he would go in there and he would drop a couple bombs, and then when he sees the markets react negatively for even a few days, he will back out. And actually, there's a funny index that I've been monitoring, created by Deutsche Bank.
Mhm.
It's called the Trump Pressure Index, which takes into consideration the things that they consider that Trump considers the most important, which is his month to month change in his approval ratings, the S&P 500, the Dow, how far it is from 50,000,
Yeah.
um, and some other various things that Trump has notoriously considered, and it's all time highs. It's incredibly high. So the assumption is that Trump is facing a lot of pressure. He may want to find a way out of this war, but when you look at it, is there's no easy way out of this. And if he does try to get a quick exit, it's almost entirely just a weak look, and not something that Trump was going to be, is going to take on very favorably. So how do you exit out of this?
Yeah, and
That
what degree can you? I mean, if he
Yeah.
were to declare victory tomorrow and then just pull all of our troops out and pull all of our ships out, does that mean that Iran opens the Strait of Hormuz? It may not.
No,
I mean,
no, it does not.
yeah,
And there's a lot of issues there actually. One, if he stops now, it sets a really bad precedent in the future for any future conflicts with Iran, because Iran's like, okay, anytime they do anything that we don't like, hey, we're going to start lobbing drones into UAE, and then Trump will back down, or whoever the current sitting president is will back down,
right.
right? It sets another precedent, is whenever you go against the United States, you're never going to beat them militarily, but if you can beat their retirement accounts, the U.S. will back down,
Yeah,
right? So there's a lot of negative, I guess, things that are coming out of this. The other thing is that the war does have to stop relatively soon, because you can't just start and stop oil production.
right.
It takes time, right?
You know, I've looked for this and haven't been able to find it. Have you been able to
Mhm.
find anything about permanent damage to the oil or gas infrastructure in the Middle East? Because I know there were some facilities that were bombed in
Yeah, so
Bahrain. Bahrain, I think is how you say it, and
Hmm.
um, Oman that had some LNG facilities that were damaged. Do you know what was
I don't know. I don't. Yeah, it was pretty severe, but I wouldn't know if it's permanently damaged. I would say that it is damaged enough to where it would take them months to get
okay?
back on track. I believe Oxford came out with an assumption that if the war was essentially stopped, within a certain time frame of the next week or 2 weeks, production wouldn't come back up until May.
Okay. So one of the things
Right.
that I noticed though is that markets are forward looking. So
Yeah.
if there's an end to the war, you could still potentially see some relief in oil and gas prices just because there
Yeah.
would be some notice, there would be some, okay, it might be 6 months from now, but we'll have production back online and the strait is reopened. If the markets thought that, I would imagine you'd see equities rally and you would
Hmm.
see um, well, at least oil and gas prices begin to fall just as a way of like, as a way of a forward looking indicator.
Yeah, but here's actually something that I've looked into a little bit more, and it's actually pretty concerning. Is that oil, while production will take time to come back, is relatively fungible. I mean, every barrel of oil that's stopped in Dubai can be replaced eventually by oil coming out of the Permian Basin, right? For another barrel out of the Permian Basin, it's
Yeah,
relatively replaceable. What isn't is one, that infrastructure that was damaged severely, the LNG. Uh, that area is responsible for a fifth of the global LNG. Well,
yeah,
that's heavily reduced now. But what's also really, really concerning, and this is something I don't think people are talking about, is the impact the other commodities, right? So helium, which is used quite extensively in semiconductor manufacturing,
right.
crippled, right? So that's very impactful to future AI development, right? Because that's going to slow down semiconductor production. Uh, a third of global seaborne fertilizer goes through the Hormuz Strait, and that goes straight to Southeast Asia, which is responsible for a large percentage of global rice production, as well as other parts of Eastern Africa, which is also responsible for a lot of other food. So one of the members of OPEC came out, or one of the princes came out and said that Iran essentially held the world hostage, and everybody's paying the ransom note through the grocery store,
Right.
right? Because global food prices are about to, they haven't even started spiking in response to this. Into this, and this is springtime. This is when fertilizer is used the most, and the fact that most of the world, a third of the global fertilizer production is essentially halted and can't go anywhere. That's a lot of future food crops that haven't taken into effect yet. Because again, cycles for agriculture take time,
Yeah.
right? So that
So
is concerning.
is that something where I think the pain index for inflation, I've been seeing reports that 12-month inflation projections are now above 5%, which
Mm,
we haven't seen since 2022.
yeah,
We all remember how badly the American people responded, or I shouldn't say badly, how much they didn't like or enjoy elevated inflation. I mean, who does, right? But
yeah. Who knows?
if that's I mean, just going back to the markets and them being more volatile of late, I think the inflation adjustment it signals two things. It signals increased interest rates down the road, so
Yep.
increased borrowing costs, which is a drag on the economy, and then it also signals that higher inflation can lead to non-intuitively forces people to reduce their consumption on non-elastic goods, so things that are dispensable. So like, your
Yeah.
discretionary purchases probably wouldn't do as well in an environment where inflation was rampant. So like from an investment thesis perspective, it makes you kind of wonder if defensive stocks might be something that you could look at if you're expecting higher inflation and lower economic growth moving forward. I don't know that
Hmm.
we're at the stage of the show yet where we're going to shift to what we think is coming next, but just looking at what happened last week, do you know how defensive stocks performed? Did they do okay?
I
Healthcare,
mean,
we talked about that.
yeah. Generally, these guys did not as bad as everybody else.
Not as that's a key
That's
word.
that's that's the key word.
Yeah,
Everything did bad,
yeah,
right? Well, general market was down, but
yeah. What was the market's
what it
number?
go,
What was the numbers? Do you have those?
I don't have the exact number up.
You need to
Let
be
me
more
pull it up.
prepared when we do these shows in the future.
the
Make sure you've got
the
numbers.
exact
That's your
weekly
job.
number.
My job is I gotta look pretty. Your job is to go ahead and, like, have the numbers ready. That was a
Let me
joke.
get let me get the exact numbers
Yeah.
over here.
I guess I'd be curious, and I think probably our listeners will be curious too, which is, like,
Hmm.
if we are going to stay in this elevated inflationary environment and higher volatility, like where are some places that historically have done well? Keeping in mind that this is not investment advice, it's just helping you kind of, as you do your own research, figure out where you might find some refuge in places when things are like this, higher elevated
Yeah.
prices.
So the I'd say the one place to turn to is again what did well in the general stagflationary
In
era.
the 70s.
Uh, yeah, in the 70s.
Yeah.
Now a lot of people have made the argument that because we are now way less oil dependent, that this shouldn't theoretically impact at least the domestic economy
Yeah,
as
it
negatively as it
feels
did in
like
the
the United
70s.
States will fare better than parts of the world, but I mean, West Texas Intermediate crude is still above $100,
Yeah.
and our gas is moving up about 4 or 5 cents a day, so it's gonna hit here too.
Yeah, we have friends coming from Dallas that are telling us the gas was almost $5 over there.
Yeah.
So it is quite painful.
We are kinda
Um,
lucky here in Central Texas. I think I'm paying, like, I use Supreme in my car, and I think I'm paying, like,
Mm.
380 or 390 right now, but I expect that to creep up into the 4s and maybe even potentially the 5s before it's all said and done. Because another thing that I read, and then I wanna come back to the markets last week, was that, refineries are having to slow down how
yeah.
much they refine because if they run out of oil, they can't start and stop like you were talking about. So they're
Mhm.
refining less so that they can make sure they don't ever have to all the way fully stop. Because again, we people might not know this is that the crude that we import, even though we are a net exporter, meaning we produce more than we use, we do import different kinds of crude oil in the United States that are refined
Yep.
here because there are other types of oil that are going to be less viscous or going to be easier to refine or that produce the types of products that we use in mass. And oil that we frack or oil, Venezuela is a big topic now. Oil that comes from Venezuela or Canada is much more sludgy and more difficult to refine. Doesn't mean we can't refine it; it just is more expensive to refine. So part of we
Yeah.
do still import oil from the Middle East because that is very good. They call it light sweet crude or lighter sweeter crude, and
Mhm.
so that crude oil is easier, and our refineries are built to refine it. So, am I right about any of that I just said?
No, you're right about that. And then one thing I like to also emphasize is that while again we are a net exporter now, a lot of the economic demand, or I guess you could say, a lot of the economic energy is shifted to gas and electricity production. So it's not like this war over here is jacking up oil prices, everything like that. But since U.S. has a lot of its own oil, it's not going to be like the same 70s. No, that's not necessarily true, right? We've seen again like gas has gone up extensively in prices.
Yeah.
That's gonna raise electricity bills. So now not only Americans will be paying more at the pump, they'll be paying higher and higher electricity costs, and that's more important now than ever with all these data centers we've just built out,
Yeah.
right? So, with higher and higher
Let's
electricity,
touch on that a little
that
bit more. What are the data centers doing that's causing electricity prices to rise?
I mean, they're just consuming so much energy for just AI, for artificial intelligence. I mean, I don't remember what the current consumption is or what the current effect is for every single, how do you say, input into a chat GPT or a Claude program. But I believe what it consumes more energy than what almost, at least more than several hundred laptops. Like it
Right.
is, it is extensive. And so anyone knows this, anyone who lives in an area that has a data center nearby it has already seen its energy prices rise, the electricity prices rise. They maybe experiencing some shortages over there as those data centers consume so much, right? So again, this war in the Middle East is gonna impact heavily almost every facet of industry in the US in one way or another, right? Any industry that uses plastics or polyethanol or anything that does PVC piping for home building is gonna
Yeah.
get affected by higher energy prices, right?
Right.
Anything that does gas or uses electricity, which is almost all of America's industries, gonna get
So,
impacted. The consumer is gonna get impacted with rising food, energy, electricity costs.
so that affects lower income earners more than it does upper income earners and wealthier people because we all don't like it. Nobody likes it. But if more of your disposable income is going to energy costs or
Yeah.
fuel costs, that means less of your money can go for discretionary purchases. Kind of goes back to the theme that I brought up earlier about staples versus discretionary as we move forward. So that'll be something maybe we can talk about next week, since we
Yeah.
didn't prepare for that today. But maybe looking into where you can hide if this is going to be a prolonged event, and it might already be forced to be a prolonged event, even if the war were to subside and issues were to go away. We might still be looking at long knock-on effects from this. And again, this is a prediction, not a piece of advice. I think we got at least 6 more months of damage from this to come, and we won't. It's because I've been through enough of these cycles to know that high energy prices tend to lag higher inflation. I'm
Yeah.
sorry, and front run higher inflation. Inflation lags that run up in energy prices. I think you
Hmm.
kind of alluded to that earlier. And what people may or may not know is that prior to the war in Iran, commodities prices and electricity prices were already running pretty high. Oil had not been, but natural gas prices have been elevated for a while. Commodity prices have been elevated for a while. Um, this some of the portfolios that we work on. ARPA, we've looked at copper over the last 2 or 3 years
Yeah.
and enjoyed the run up in that. Well, obviously gold and silver are both commodities. Different reasons why people will purchase those, but huge run ups in gold and silver prior to this
Yep.
to this event. Silver is an industrial metal, so it gets used in more than
In
just
other ways, yeah.
store of value. Gold is as well, but gold is so valuable. People I think look for alternatives to gold as a mechanism for industrial purposes. But we've seen a big run up in commodities already, so any additional rise there could be very problematic. And then before we move on to the week ahead, um, what about tariffs? They haven't been relieved. There's currently a
No, not
15%
yet.
tariff on the entire world because of the Supreme Court struck down the tariffs that President Trump had been using, and so he decided to use a different mechanism, which allows him to do 15%. I think for I have to remember, is it 90 days that he's allowed to do that, or maybe
Hmm.
only 60? So that's currently on, and we do know from history, but also from studying any type of economics, that tariffs do add inflationary pressure. So one thing could be, sorry, my computer went off. One thing could be that he could really, like, as a way to, he may not want to do this right now because he's a big tariff fan, but if this inflation were to stick, he could potentially
Yeah.
pull those tariffs back, and that would maybe be some relief for the American people. Do you think that that is likely, or I
I,
don't know how you
I,
handicap what Trump might or might not do, but
yeah, we'll find out in one of the Truth Social tweets what he actually ends up doing. But I'd say like I wouldn't be surprised if he does start pausing tariffs. I mean, he's already started relieving sanctions.
on 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 Russia.
He also relieved sanctions on Iranian oil currently in the ocean right
So
now.
wait. So we're fighting the Iranians. They're firing back at us. They've killed some of our men and women and
Yeah, we
damaged
killed
our
almost the
equipment,
entire leadership staff, and yeah,
and now we're going to relieve the sanctions on their oil so that we can get oil into the market. So it's an interesting.
whatever was already in the water has been the sanctions have been relieved. So it was because
Yeah,
he can't handle a massive oil shock, which I don't
right.
think surprisingly I don't think they were prepared for somehow.
Yeah,
I don't think they were anticipating this level of resistance when they killed I don't know the top 30 guys. But this is another predicament that they put themselves in. Everybody else who can make a decision doesn't respect anyone else's decision in Iran, so they're all kind of like their own isolated pods, and they're all underground with no electricity for fear of getting pinpoint with a bunker buster.
yeah.
So who do you negotiate with?
Yeah, I don't know. Yeah, that's not
And
my area of
then
expertise.
yeah,
So
so
we're
yeah,
painting let's shift over for the last 8 minutes of the show into kind of what we think is coming next. So we
positions.
obviously had a volatile week last week. The S&P was down around 2%. Dow was down about 3%. NASDAQ around 1.3. So those are kind of the estimates for
Yeah.
last week. And then give or take 0.1%. I didn't calculate it to exactness. Volatility was up quite a bit last week. We saw the VIX spike very, very dramatically on Friday. I haven't looked at what markets are doing today, but I know VIX was spiking for sure on Friday. Big jump in the fear. So, what do we think is going to happen this week? I'll give you my kind of 2 cents, and then we'll go from
Sure.
there. In when we're in this much pain, markets are down now. From peak to trough around 10% for the S&P. Not quite 10% yet, peak to trough.
Hmm.
For year to date, I looked this morning; it was down 6.5% year to date. So the S&P's down substantially, but that's not really that bad. Historically, 6.5 is not something that would be a panic level. 10, that's your correction. 20 is your bear market. If you had to bet today if we're headed to a market or not, what would you bet?
I would bet that we are headed towards a bear market at the current
So a
right now.
20% decline, and this is where it gets difficult for financial professionals and people who do what ARPA has done for as a CFA and analyst you can analyze the effects of things like this and see where we're headed. What we can't
Mhm.
predict and what we can't analyze is if Trump will come in and do something that changes the narrative.
Markets.
And people do really put a lot of stock, at least the markets do, in what he says, even if he doesn't follow through on it. That it does
Mhm.
move markets when he tweets or truths. So I guess as we head into this week, my prediction, this is why I brought that up. I think we'll see some sort of relief from things that Trump tries to do or say.
Okay.
I do start to wonder though if a number of those events occur that the end result isn't what he said was going to happen. If the markets do begin to lose faith in kind of the stuff you were talking about, like okay, well, Iran still bombing in Israel, still hitting places in the or in the Middle East. We're still shooting at them. So like you're hearing, oh, we're going to have some sort of resolution, but you're not seeing that on the ground and you're not seeing that reported in international news. I wonder if at some points markets, which tend to sniff out BS pretty well over not necessarily
Generally,
over a longer period,
historically.
if they start to lose faith, though, if they start to say, I'm not going to buy that. So I guess I am predicting some sort of relief this week because I do think there'll probably be several tweets or truths that I guess there are truths now that we're heading in the right direction, and markets are looking to be optimistic. Like you said, those dip buyers are
Yeah.
out there, and I mean, younger investors, 30-year-old, 35-year-olds, and lower, have not really seen a prolonged bear market. We've seen some short-lived ones like 2022, where the markets were down 26%. I think at the bottom, that was the last bear
Mhm.
market we had. Within a year, we were back to where we were. So it
Yeah.
wasn't long. The last really long, deep bear market was '08. So '08, '09, that lasted about 3.5, 4 years from peak to trough. And besides that, even COVID, which was very, very scary, we were peak to trough in less than 8 months. So I'd be curious to see if I'm right, if this week we see some sort of relief that's born from leaked news, to the degree to which that's gonna have some effect. What do you think about this week ahead?
So I think, this is actually probably the exact opposite of what it normally would be. I'm a little bit on the more bearish side this time around. I think this week, from what I've seen, I think I'm seeing some tiredness in the marketplace. I think we're seeing some exhaustion of dip buying.
Yeah,
Markets did start off relatively hot today, but now they're only up around 0.14. They started the day around 0.8, 0.9%
yeah,
on, startup. I think traders are no longer buying anything that Trump is saying on the tweeting side. He's shown last week a lot of desperation, I think, and this has to do again with the Trump pressure index. He's shown a lot of desperation by sending out these, oh, we're negotiating with the Iranian delegates, and then Iran coming out saying, "What are you talking about? We haven't done anything.
yeah,
Who are you negotiating with? Most of those guys died, anyways."
yeah.
Um, so I think there's a lot of I think the risk or the volatility continues into the week. Um, I th- I think that the best place to be would be dependent on kind of what your general focus is and your risk tolerance, right? If you're a younger individual like me and you're in the 30s, you can ride out volatility. This is your debt buying opportunity. If you're on the older side, you got to really consider what you're going to start doing here, or have your advisors consider what they're going to start doing. Bonds aren't the safe haven either that they used to be.
They haven't been this time around, and
Yeah,
that's 2
no,
times in a row. 2022 was the same way.
yeah. So, and the reason is because longer end of the curve is rising. Break even inflation rates are staying the same. So correlation between bonds and equities rise. It is not the protection hedge it is anymore. Um,
I did notice last week gold kind of broke off. It had been pretty correlated with these
yep.
sell-offs, and gold advanced last Friday while stocks declined. So is that a sign that gold is starting to regain its safe haven,
Yeah, some level. Yeah, some level of a safe haven demand there. Also,
right,
you got to take into consideration a lot of gold's decline is because it was up already an extraordinary amount, and when an initial
almost up
shock
something like
occurs,
60% last year, correct?
yeah, and then it was 20+% this year,
Right.
and within like the first month of the year. So
Right.
part of it you got to take into consideration is like when an immediate shock like this happens, the first instinct is cash, right? Cash or just
Well, with
some form
rising
of
interest
hedging.
rates, isn't cash kind of a decent? I mean, so let's say we have 5% inflation and we get 4% in a cash account, or 3.5. Losing 1.5% in purchasing power is better than losing. Let's say the market goes down 25,
Yeah.
and then you can take that cash strategically and put it in the markets once we're down 25. So having dry powder for an event like this isn't the worst thing in the world, is it?
Yeah. And as I said, it's less bad.
And again, now we're talking more to traders, not if you're somebody's under 55 and older and you're nearing retirement. You got to have a much more fundamental plan than
Yeah.
I'm going to buy, I'll take all my money and buy dips. But I got a 22-year-old son who just graduated from college. And I'm like telling him, he's licking his chops right now. So every time that market goes down, you should just be going, yes, I'm getting some more on sale. And that doesn't mean that if you're over 55, that's not a good strategy. It's just, you got to have a more fundamental plan at that age, because all these volatility spikes can be very damaging to an income plan. So
Yeah.
that's me talking as a financial planner more than as a host of a podcast. But I just want to be sure that we look at the situation with clear eyed. So if I'm hearing everything right, I'm bullish for the week. You're bearish for the week.
I'm bearish.
I'm
Yeah.
I'm mildly bullish. I'll put it that way. You're bearish for the week. Oh, we just finished up a terrible week last week, followed by what has been basically 5 consecutive negative weeks.
Hmm.
And so you're betting on the come for the sixth consecutive negative week. I think we eke out a small amount in the green for the week. When we come back next week for the show, we'll talk
We'll
about who
see.
was right or who was wrong. But I think also too, let's put a bigger focus next week on where people can hide. I mean, I think we talked about cash today. We touched on
Yeah.
gold today. I'm thinking maybe if we go into an inflationary period, that maybe real estate is worth having a conversation about. While
Real
maybe it's
estate.
correlated at first, at some point, doesn't the replacement costs and rents that have to rise in order to meet that inflation start to hit home? I'm also interested in you and I kind of discussing consumer discretionary versus staples and defensive, and
Yeah.
some of the ETFs and different things that person could choose if they were feeling defensive.
Hmm.
Understanding, of course, that we will never give investment advice on this show. We're simply talking about what happened in the past and what might happen
Yeah.
again in the future. Always do your own research. Always consult your own financial advisor. Always think about what your unique needs are and what would drive you to make an investment or not. This show is just about us really having, like I said before, our cathartic experience with one another. Today we went a little over the 30 minutes. I think in the future we're going to try to keep it hard to 30 minutes, a little bit more of a structure around last week, next week, and then what you can do to help yourself out. Arpit and I are also throwing around the idea of doing a quarterly podcast where we'll review the quarterly results. That one might be a little longer. We may have some guests on that talk about
Yeah.
experiences that they've seen and had, and it's always good to get some outside perspective. Arpit and I challenge each other a lot behind closed doors. We'll probably do that a little bit on the show, but also we want to avoid groupthink. So getting some folks in here from outside perspectives with a little bit deeper knowledge, or maybe not knowledge, because I don't think very many people know more than Arpa does, but those that have had a little bit more time on Earth than Arpa has.
Uh,
So,
yeah.
I'm an
I'm not
instinct
this.
guy. I go with my instincts. Arpa looks at the numbers and figures.
So try to keep me a little humble here, Joe.
Oh, I
I
will.
still
You
got
know I
I
will.
still got I still got a lot to learn.
When you're
Uh,
wrong next week and I'm right, I'm going to tell everybody.
my main bet though is that there's no major tweet that occurs during the markets open. I expect some major thing to happen on Saturday when the markets are closed, or maybe at for our time 4 o'clock when markets are done and there's no more trading and the insider guys got their bets on. That's when a peace deal gets
Okay.
will
Well, I
happen.
hope
So
it happens for lots of different reasons, but always I want to see the market going up, not down. So we'll see you next
yeah.
week. We appreciate you guys tuning in.
All right. Thank you.